Potential or existing homeowners may be wondering what this year will bring to the housing market.
That's right. You may be wondering if you should be buying, continuing to rent, or remodel your existing home.
Should you buy or rent a house in this upcoming year of 2023?
The rents in our area are so high, so much higher, that I can buy a house so much cheaper a month. Not true. You're not comparing apples to apples.
Should you be striving to pay off your mortgage, or is it possible that there's something different that you should be doing with your money?
You're fearing that the housing market is crashing.
It is crashing, and we've seen rapid rate hikes, not just rate hikes on mortgage rates, they've been rapid rate hikes.
This is a changing economy and a changing housing market. Home sales and prices continue to drop, but our rental market is rising.
But as we all know, nobody can predict what's going to happen.
Should I buy now, or should I continue to rent a house in 2023? It's an age-old debate, particularly for first-time homebuyers. You want to buy, but interest rates are at record highs at 6.4%, and home prices have shot up since COVID. It feels scary to be a buyer in this market. But renting is throwing money down the drain. You're helping someone else pay the mortgage. So, what's the right choice? Buying or renting? Well, let's take a look at the numbers and then decide. Quick disclaimer, I'm not an accountant or a real estate agent. This is just my analysis. Your situation is different, so make your decision independently.
This video is brought to you by Houzeo, America's most advanced home buying and selling platform. Americans across the nation are saving on commissions with Houzeo.com. You can too. Check out Houzeo.com on the web or the Houzeo mobile app.
So let's get right into it. I've picked two homes here in Houston in the same zip code to make an apples to apples comparison. One listed for sale and the other listed for rent. To buy, we have a nice 2,300 square foot home with 4 bedrooms and 3 bathrooms. It is priced at $275,900. This also happens to be the average price of homes in Houston. Fairly Americana. And to rent, we have a similar 4 bedroom, 2.5 bath, 2,488 square feet house in the same zip code. There are some differences, but these homes are fundamentally pretty much alike. We can assume these houses would have similar costs if we rent or buy either of them. Homeowners in America live in their houses for 13 years on average, so that's how long we will assume you will live in these homes too. Now let's compare the cost of buying versus renting these houses. Monthly cost of buying a house. Let's break down the costs of buying a home on a monthly basis. The average first-time home buyer puts up a down payment of just 6%. So for our $275,900 home purchase, let's assume we have a down payment of 6%. That's $16,554. Oh, and don't forget the closing costs. Using Houzeo's closing cost calculator, we know we'll pay $7,950 in closing costs when buying this home. So the total cash out of pocket is $24,504. Now let's look at our monthly payment. Today's interest rate on a 30-year fixed home loan is 6.4%. With that, our monthly mortgage payment becomes $1,622. But that's not it. When buying, you have to pay property tax and homeowners insurance and HOA dues as well. Our total monthly payment now becomes a staggering $2,261. We're not done yet. Since we are paying a down payment that's less than 20% of our home's value, we have to pay mortgage insurance as well. This is a payment for those mortgage lenders who consider our loans risky due to our low down payment. However, we will only need to pay PMI for the first 11 years of our loan, which amounts to $21,746. This adds $139 to our monthly payment. You have to maintain your own home, so we will add estimated maintenance expenses. You know, there could be a roof leak, plumbing issues, electrical problems, and whatnot, and we got to repair them. The rule of thumb is to budget 1% of the house price for repairs. Let's estimate that to be around $275 per month. So for the next 13 years, we'll be paying an average of $2,675 for our Houston home, and you shelled out $24,391 in cash. But wait, that's not the whole story. You forgot that as a homeowner, you get a lot of financial benefits. Financial benefits of buying a house. Money spent on buying a house is not money gone. Unlike renting, you get monetary benefits even as you pay for your home. At its heart, your house is a forced savings account. You cash these savings when you sell your house. Over these 13 years of ownership, you've paid down $57,347 in principal. That's $368 per month. That's really building equity in your house. So let's deduct that from our monthly cost. The government will also give you money for owning a home in the form of tax savings. As a homeowner, you can deduct a part of mortgage interest and property taxes from your taxable income. Over 13 years, we have paid interest of $194,063 on our loan. Let's assume a marginal tax rate of 25%. So the government will give us tax benefits worth a little over $48,000. That's almost $311 per month. Let's deduct that from our monthly cost to buy. Similarly, the government also gives us a deduction of almost $132 on our property tax payment every month. Now let's factor in home appreciation. The national home price appreciation averages around 3.5 to 3.8%. Let's assume our home appreciates at just 3% per year. This means that after 13 years, when we sell, our house will be worth $405,168. That's an increase in value of $129,000. On a monthly basis, that's $829 per month. Let's deduct that from our monthly cost as well. Selling your house, however, means we'll be paying seller closing costs. These are typically at around 7%, but with Houzeo, we save the entire listing agent commission. So we'll assume 4% in seller closing costs. That's $16,000 or $104 a month. So our monthly cost of buying and owning the house comes down to just $1,140. Monthly costs of renting a house. Now let's take a look at the cost of renting a similar home. Our base rent for our Houston home is $2,500. We also need to pay renter's insurance. Let's assume that's $13 per month, which is the average in Houston. So in all, we'll be paying a total monthly rent of $2,513. Our initial rent is only $2,513, but like everything else, our rent will increase with inflation. Let's say our rent increases by 3% every year, aligned with inflation. In the 13th year, we'll be paying $3,690 for the same property. Our average monthly rent payment is then $3,019 per month. Obviously, our landlord will ask us to pay a month's rent in advance as a security deposit, so our initial payment is $5,000. But we didn't have to pay the down payment up front. That's an opportunity cost we have to account for. We paid 6% of the purchase price as our down payment and some closing costs with it. That's a total of $24,391. Minus the money we paid up front to our landlord, the difference is $19,378. To give this money an opportunity to grow, we will invest it in the S&P 500, the most widely used index in the US stock market. Assuming a growth rate of 10%, our investment of around $20,000 will become $66,898 in 13 years. That's a monthly gain of $305 that we need to subtract from our monthly payment. So our net monthly cost of renting a house is a grand total of $2,714. So it's cheaper too. Through our calculations, we can conclude that buying a home would be significantly cheaper than renting, more than $1,500 a month cheaper. And remember, we only assumed a 6% down payment. Bear in mind, this conclusion comes from the parameters we considered in this video. They could change, and so would the outcome. Although they would need to change very dramatically for renting to be cheaper than buying. But owning a home comes with its share of responsibilities. If worrying about repairs, buying and selling, and the general idea of settling in one place for long doesn't sound like you, renting would make more sense for you. Also, if you don't have the down payment, renting might be a great option for you. But if you plan on staying in one place for more than 5 years, and you have the money for the down payment, buying a house may make more sense financially. Real estate has typically outperformed inflation, after all. We hope this makes your decision easier. We've churned the numbers for you. It's time for you to make your own calculations. If you have any questions or thoughts to share, feel free to comment down below. Like this video and subscribe to our channel for some in-depth real estate insights. If you like this video, you might also like our video on why title insurance is so expensive. Title insurance is one of the closing costs that we mentioned earlier and will factor in your final expenses. That's it from us today. See you in the next video. And subscribe to our channel.